Greetings, members, one and all of the Salivation Nation. Silver plunges for the exact reason why it should skyrocket. Let's explore. We're seeing a pretty dramatic drop in silver prices today. Gold took quite a hit too. Let's take a look now at the markets in this report here. Gold is down as I record this video about a half an hour before the close of the markets. Gold is down over $34 an ounce, just below $1,900. And that is something that didn't think we would see this year, but indeed it has happened for sure. That's over 1.75% drop on the day. Silver is down almost 50 cents, down over 2% drop in price to under $24 an ounce. That is a price that I had predicted based on some information in another video that we would very well may see this, and indeed it has happened sooner than I had expected, actually. Pretty amazing. Platinum took a pretty modest drop in price today, down not even a half percentage point, but down $4. Many of us feel that platinum is undervalued now, maybe even to some extent more undervalued than silver is. But look at that, still well below $950 an ounce, $932 to be exact. And palladium took a massive hit, over 10% drop today. That's a whole nother story. I don't even want to go there right now, but $2,202 is the ask price. That has shocked me, actually, because I thought for sure after the LPPE stopped taking in palladium and platinum from Russia, I thought we would see this go up dramatically. But I think a lot of this may have to do with what I'm going to talk about, the one-word answer as to why silver plunged today and the reason why it should skyrocket. And I think because of what platinum and palladium are doing, this is why we're seeing a 3.4% drop in rhodium today, down $600. So let's take a look at first a story here from Kitco that talks about gold's price has given up $1,900 and silver falls below $24 an ounce. Folks, in my view, this is a good buying opportunity. And indeed, it sure is, especially after the news we've been hearing today. Maybe even part and parcel to Elon Musk buying Twitter. That broke news. How does that relate to precious metals? Well, I think it relates in so much that Elon Musk is certainly making inroads, and I think he's going to probably push Tesla because it's in the news, and electric vehicle usage may, certainly with Tesla's, what Tesla is doing, that could have an effect, given especially what I'm talking about here, in another article that I talk about, that I'll reference here in a moment. But gold and silver are starting the week with some heavy selling pressure as gold prices drop below $1,900 an ounce and silver falls below that $24 an ounce. So according to some analysts, to drop below the critical psychological level opens the door to further losses as bearish sentiment rises in the marketplace. Indeed, that's for sure. And that is something that I think there's a lot of different variable factors we have to take into account here, such as rate hikes coming. We're talking 50 basis point rate hikes, multiples of those. James Stanley, senior market strategist at Daily Effects, said that if gold prices see a sustained break below $1,900 an ounce, he could see prices testing support at $1,879 or even $1,842. And for those of us who are buyers, that is good news. Ole Hansen, head of commodity strategy at Saxo Bank, said he's watching support at $1,890 an ounce. Gold, led by silver, has joined the weakness seen across metals and commodities in general, and concerns a succession of aggressive rate U.S. hikes will boost the dollar while sending real yields higher as inflation is being brought under control, Hansen said. Of course, you and I both know that I don't think these rate hikes are going to have any effect at all on inflation. Why is inflation here? Because the Fed keeps printing money. They can raise rate hikes to the moon. I don't think that's going to help. Precious metals are seeing renewed selling pressure as the U.S. dollar index pushes to a new multi-year high above 101 points. According to some analysts, the greenback is testing resistance at a 21-year trend line. We know the deal there. The dollar is just the cleanest of the dirty shirts in the laundry pile. But nonetheless, the dollar strength does not mean that the dollar is doing well. Give into account what the modern monetary theorists are engaged in. Market analysts note that the U.S. dollar is attracting strong momentum as the Federal Reserve continues to aggressively raise interest rates through the rest of the year. Last week, in a panel discussion during the International Monetary Fund spring meeting, Jerome Powell, the Fed chair, said that the central bank is on pace to raise interest rates by 50 basis points in its May meeting. With a little over a week remaining for the Fed to hike by 50 basis points to begin quantitative tightening, as we expect, demand for bullion from the investor community is likely to ease. Well, and that bullion demand, it just depends on what kind of silver and gold it is, because we know that there's great demand and strong and actually quite exciting to see the demand continue to climb for physical bullion buyers. Bullion from the paper side, well, that could subside and bring prices lower for sure, but we know prices will remain high with premiums as people continue to buy the metal in spite of what happens in the paper markets. While the yellow metals prices have remained extremely resilient against an aggressively hawkish Fed, as a protracted war in Ukraine simultaneously raised both the geopolitical uncertainty and inflation risk, and thereby fueled demand for havens, we see few participants left with the appetite to buy gold, said commodity analyst at TD Securities. Well, and that's just it. Gold does typically seem to be the more stable of the precious metals. I outlined that in a video that I posted earlier today. I encourage you all to check it out. But nonetheless, that is the case. Gold tends to be, and it's reflected in the price. As I showed before, its drop was not nearly as severe as silver's. According to the Chicago Mercantile Exchange's FedWatch tool, markets see interest rates rising as high as 3.25% by the end of the year. That's going to put pressure on gold and silver, folks, in the short term. But I think if they will be resilient against it in spite, because if they think that's going to bring down inflation, I think that that is something else that to consider not happening because of stagflation threats that could come from these rate hikes, especially as hawkish as they're going to be. The bearish sentiment is growing in the marketplace. Some analysts have said that the current pullback could be seen as a long-term buying opportunity. Smart folks will buy the physical in this case, and we'll see what effect that could have. If you have a long-term sustained buying of the physical, sooner or later the spot price will catch up, but it's going to take a long, sustained, and increased widening of the buying pool of those people who do that. So we'll see here. But nonetheless, it's enough for that article, but very interesting indeed. Now we're going to get into the one word that reason why it should skyrocket is the whole reason why it fell. Because this article here in Kitco did not talk about the concerns about the global economic growth based off of the coronavirus pandemic in China. Stocks remain under selling pressure as investors rush to safety in this article from FX Street here. Sustained demand for the American currency has pushed the gold price to a fresh multi-week low of $18.91 a troy ounce. The main catalyst for the ongoing dollar's demand came from China, as the country seems unable to control the coronavirus outbreak, now spreading into some Beijing districts. Companies halting operations in the area are expected to steepen current supply chain issues and the detriment of local and global growth. Asian shares plunged, dragging European and American indexes also lower. Wall Street sees no relief bounce, and the three major indexes trade in the red after Friday's slump. The Dow Jones Industrial Average down over 300 points. Government bonds yields are in retreat mode amid resurgent demand for safety. Higher bonds usually mean lower yields. The 10-year U.S. Treasury note is currently yielding 2.79%, well below the peak at around 3% from last week. And so therefore, if you have, and a lot of China is obviously involved, a lot of manufacturing, as we know, in a lot of these green technologies and the like, and that is what's going on. So essentially what's happening here, it's a fear of what's going on there, of the supply chain issues continuing, which means there's going to be less demand for silver for those items and product, which leads to lower prices, lower demand, lower prices, at least on that aspect and in that front. Demand doesn't always relate to higher or lower prices, as I mentioned in a prior video, but I think this is only exacerbating it here. And so typically, fear drives the markets. And in this case, it's working in the opposite direction. People feel fear, so they run to the safety of cash, the strong safe haven, strong selling pressure. We saw that at the very beginning of the coronavirus pandemic as it affected the United States in March of 2020. This is a mini example of that occurring here, according to FX Street, and I actually agree with this sentiment. Kitco kind of missed the mark here of some of the reasons behind it. And we're all tired of hearing about this pandemic, but nonetheless, there is the cases of what's happening, and obviously the lockdowns that Shanghai is doing have had no effect. They've been draconian, but still the virus is spreading there. Very interesting indeed. Again, let's take a look here again at the prices. This is where we stand. And so it's very interesting. Now silver's lost 51 cents. Pretty amazing. Pretty amazing to see a run to the safety of cash in these circumstances. So let me know what your thoughts are in the comment section below. This is a good buying opportunity. What will premiums be in these lower prices? Likely the same, if not higher, on a percentage basis because of all this. But if you can save 25 cents on a purchase of an ounce of silver rather than 50 cents, it might still be worth it. But nonetheless, you have to weigh that decision on your own to be able to find these buying opportunities. So let me know what your thoughts are in the comment section below. Would like to extend a multitude of gratitude to you all for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.